Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Eurodollar, an immediate countering bearish harami yesterday, if only just after the previous session's bullish opening white Maribosa and bullish engulfing pattern, if only just on the latter one there. The price is backed off from what is turning out to be some significant overhead resistance from the combination of 50% Fibonacci line of the January 21 to September 22 move, which is currently at 109.44, and a dark blue neckline of the July 17 to November 18 head and shoulders pattern, currently at 109.47. A little beyond this is the purple neckline, currently 110.21 of the January to February 2021 reverse head and shoulders neckline. And as I've said recently, I would continue to keep an eye overhead at the September 2024 high at 112.13. You see, if prices exceed that, then we have set up the conditions for this market to make that rarest of patterns a possible annual key reversal. However, we have a number of significant resistances ahead, starting with that 50% Fibonacci line, the January 21 to September 22 move, and the dark blue neckline, currently at 109.49 of the July 17 to November 2018 head and shoulders pattern. Now, this 50% Fibonacci line capped a reactionary rise back in November last year. And so far today, well, prices are dipping a little towards a lesser Fibonacci line at 108.43 at the moment. Cable, aka sterling against the US dollar. A higher but indecisive spinning top, but was also a second bullish white soldier. The price has nevertheless made a new high and high close not seen since early November last year. The market last week reached the topside primary target X at 129.15 for the breakout from the dark blue ascending wedge pattern. The secondary, harder to reach target X1 is up at 131 even. Below we have the 61.8% Fibonacci line support of the October 23 to September 24 move at 128.99, and then the flatlining gold long moving average below, currently at 127.90. As I've said recently, I would continue to keep an eye overhead at the September 24 high at 134.34. You see, if prices exceed that, then we have set up the conditions for this market to make that rarest of patterns a possible annual key reversal. However, a number of significant resistances ahead of that, starting with the bright red neckline, currently at 131.36 of the small, narrow, November to December 2024 based reverse head and shoulders continuation pattern, as well as the low of December 2020 and the high of July 23 at 131.33 and 131.44 respectively. Now, so far today, more indecision, and we're wandering around yesterday's open and close and within yesterday's range. US dollar against the Japanese yen. An inverted hammer pattern type yesterday and second bullish white soldier. I'm not sure yet about this pattern as it's rather high up, and I'm also dubious about inverted hammer patterns generally. Overall, the market continues to travel lower within three main patterns. The first is the oft-mentioned early December 24 to date rounded top pattern. We formed the rounded top itself and started the exploitation of the downside. The primary target area was reached late last week in the 147.20 zone, but the secondary, much harder to reach potential, in this case much harder to reach potential, is down in the 138.40 zone. Now, I've taken the decision for now not to assign it as a target because, after all, it is so far down below the 2024 low in September and would bring up all sorts of questions if it happened. The primary one would be if we would form a very rare annual key reversal down here. In the meantime, we have the second more immediate pattern here, highlighted in pink on my daily chart, an early February to date descending wedge pattern, currently 145.96 to 149.09. This pattern is the current driver lower and has helped the rounded top reach its primary target. We are still within this pattern. I will monitor it closely. Finally, is a big picture pattern of a bright red July 24 to January 25 bearish Andrews pitchfork. This pitchfork is showing the bearish angle of attack of this market as prices head lower. I Finally, I do note last week's weekly key reversal down here, and that has helped kickstart this recent phase lower. Now, so far today, a pullback lower, though not by much, before moving back up towards yesterday's close. US dollar against the CNH, the offshore Chinese yuan. An immediate countering bullish harami yesterday, if only just, after the previous session's bearish engulfing pattern. Yesterday's reactionary move back up was prompted by the market testing down to the flatlining gold long moving average, currently 722.02, and rejecting it, though not as high up as the overhead resistance of the influential dark blue upper trend line, currently at 725.57, of the January to March 2024 ascending triangle pattern. Or above that, the combination of the rising medium, mauve medium moving average, currently 726.84, and the bright green upper tine, currently 726.92, of the breach now seemingly repaired late December 24 to late January 25 bearish Andrews pitchfork. This bright green bearish Andrews pitchfork is the current showrunner of the market, and thus still puts at risk below the gold long moving average, the May 2024 high at 719.64, and then the bright green middle tine, which is currently at 719.35. Overall, there continues to be the possibility of looking at the whole late November 2024 to date action as a possible double top Eve and Adam type. On this pattern, I would watch very carefully the market's actions and responses on any approach to the gold long moving average below. Now, so far today, not much, with the prices rotating around yesterday's close before attempting a move up to yesterday's high and a dark blue upper trend line extension above that. US dollar against the Brazilian real. An indecisive spinning top yesterday with the market's high and low perfectly encapsulating the market pressures on both sides. Above, we have the bearish pressure of the March 21 high at 588.04, and especially capped by the mid-December 2024 today downtrend, currently, and that's a dark blue downtrend, currently 583.51, and a little higher up by the very slowly rising mauve medium moving average, currently at 591.28. Meanwhile, below we have the bullish pressures of the bright red breach but seemingly repaired May 2024 to date uptrend, currently at 578.45, reinforced by the slowly rising gold long moving average, currently 572.66. These two, the bright red uptrend and the gold long moving average, have been guiding prices higher for 3 weeks now. We also still have, looking below, target X in the 563.35 zone and a secondary target X1 down in a 541.95 zone on my daily chart. These are the primary and secondary targets for the drop down from the large early October 24 to mid-January 25 expanding wedge pattern. They are still live. US dollar against the Mexican peso. A second bearish black crow after the previous session's immediate countering bearish harami. Prices are trying very hard to establish themselves below the bright red lower bull channel line, currently at 2025.09, with a very gently rising bright red early November 2024 to date bull channel, and that's currently between 2028 even to 2106.21. This bright red shallow bull channel has been the show running pattern here since last year, and it is being seriously challenged right now. Further below we have the October 2022 high at 2017.20, which has held up prices this week and in February and January as well, with support at the August 2024 high at 2004.45 and the congestion zone between 1987.96 to 1991.31. Meanwhile, above we have the presence of the very slowly rising mauve medium moving average, currently 726.84, which has capped prices this week after last week being tested, and prior to that being one of the core supports. Now, a little above this is the green short medium moving average, currently at 2048.20, which had been a market attractor until this week, and now sits above on its own. It is still too early to start looking at targets below because the break lower could all still be a false break. But I imagine it will not be long before we start to see the market stabilizing below the bright red lower bull channel line, or not. So far today, well, not much. around the market moving around the October 22 high at 2017.20 right now.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.